Welcome back. You're still watching Business Incorporated on Channels Television. We're still talking agriculture, which we started before the break. Zimbabwe is urging farm owners with unproductive land to form partnerships to bolster agricultural output and slash the country's import bill, with the threat that unproductive land may be repossessed and redistributed. What does this mean to the country's agricultural sector, which is a major contributor to its economy? We have Matt Kindiga, practice leader, Sub-Saharan Africa Front of View, sharing his thoughts with us. Good afternoon, Matt. Good to have you again.
Hi, good afternoon. Thanks for having me on the program today.
So how will this round of land reform, how do you see it affecting output and, of course, the country's growth outlook?
Yeah, certainly. So it is a step in the right direction. It's unclear how effective this will be because it depends on how well it is received by current farmers, companies and individuals that are interested in investing in the agriculture industry. But certainly it does show some resolve amongst or within the government to improve agriculture productivity. It also represents quite a significant step away from, or a continued step in the right direction away from the very disastrous land reforms that took place in the early 2000s. So the government has made increasing steps since the death of Mugabe to encourage investment into the agriculture industry, increase confidence amongst foreign investors, especially in agriculture. So we see this as part of this process. We do expect overall the agriculture industry to perform quite well in Zimbabwe over the next year or so, and this is despite or irrespective of whether these reforms are successful. And this is because the government has already introduced a number of incentives to improve productivity. Also, there have been very favorable weather conditions in Zimbabwe over the last few months, and global commodity prices, including for agriculture commodities, are quite elevated at the moment. So this all bodes well for the agriculture industry in the country, and we are expecting this to positively contribute to economic growth. We are forecasting growth of about 4% this year. So generally, it's quite an upbeat story for agriculture in the country.
And do you see this bringing to higher agricultural production, which could improve inflation rate?
Yes. So Zimbabwe has really struggled with hyperinflation or another round of hyperinflation over the last couple of years. The inflation rate peaked at over 360% this time last year. It has come down significantly. It fell to around about 50% during the end of last year, but it has started to creep up again. Higher agriculture production certainly will contribute to less pressure on food prices domestically, at least. And so we are unlikely to see a return to the very high rates of inflation that Zimbabwe saw last year or the last couple of years, partly because of higher agriculture production. But inflation is heading in the wrong direction again. The rate increased to 60% in December last year. And we are expecting to see the inflation rate rise slightly over the next couple of months and into the rest of this year. We're forecasting an average of 65% in 2022. And part of the reason is because the higher agriculture production impact on food prices domestically will be outweighed by higher imported food costs and the cost of imported goods. And this is a global trend that lots of emerging markets are struggling with. So global cost pressures are very high, and this will contribute to high inflation. The country is also struggling with currency problems, which will weigh on inflation as well. So foreign currency shortages and depreciation of the currency.
And what should businesses expect from Zimbabwe's currency landscape this year?
Well, currency woes in Zimbabwe will continue. That is very clear. We're not expecting a clear resolution. It is contributing to very high inflation in the country. And since the introduction of the new iteration of the Zimbabwean dollar, there has been sharp depreciation, sustained depreciation of the currency. And we also have seen the emergence of quite significant foreign currency shortages. This has contributed to the development of a very vibrant parallel market. At one point last year, the premium of the US dollar on the parallel market in Zimbabwe reached 100%. So certainly not a great environment when it comes to trying to manage the currency landscape. this has prompted the central bank to clamp down on the parallel market, so it's becoming even more difficult to access foreign currency. In terms of the outlook, we are expecting this to continue more or less the same into 2022 and 2023. We're forecasting more depreciation of the Zimbabwean dollar to an annual average of around about $116, $120 Zim dollars per US dollar this year, followed by 150 per US dollar next year. So more currency problems and difficulties going ahead, despite the relatively upbeat overall economic growth outlook for the country.
All right, Matt, thank you so much for sharing your thoughts with us. And of course, we'll do this again next week.
Thanks very much.